This is one of the subject feels like my business owners are not caring about, and I care about it because I just come through a DOL audit for one restaurant. I have a lot to say about this, and I hope that to offer you some real good tips. And in this webinar, I have a workbook already developed, and I'm going to give that to you. And so you can see how to work that in to your operation to help you be in compliance with DOL. At the same time, still run your business properly. So have you ever heard of people telling you that, oh, can't afford the payroll taxes, we're just gonna close? So yes, a lot of taxes can definitely kill a business, but supposedly taxes is all uniformed, right? So you pay taxes, I pay taxes, we all do. So if one business is not surviving because of taxes, but the other business survives, with the same taxes, that poses a question of why. And that dividing line between the businesses that be in compliance and also surviving, or versus the businesses are not in compliance and also not surviving, the dividing line is to know the law and know the regulation and implementing it based on your business specialties. So that's really what we're trying to bring to you today. No responsibility disclaimer. Oh, my favorite slides, because with that, I can relax, right? So I can tell you what I think. And if it is wrong, I come back and tell you, oh, no, don't listen to me. And that is not really right. And of course, every statement we make, and you need to take that into your situation, because it could be a right statement in certain time for certain cases, but may not be the right one for you. So make sure that you take responsibility for what you snatch from internet. Never should trust internet, and you should just follow government website. They're boring, but they're right. And irs.gov is the one I visit the most. And I'll tell you that I at least visit irs.gov 2-3 times a day. I'm not kidding. And so that's really the website I put my nose in the most. So, and here, what is DOL audit? And this is not income tax audit, because a lot of times people get really confused. As soon as federal government comes and they go like, oh, they're auditing me, and they're thinking of, well, they're going to look at my expenses, look at the income. No, they probably do, but not for the purpose of income tax. They are looking at your accounting record is because they want to figure out who you pay your money to. And so other than your employee, maybe you're paying Ying and $5,000. They will say, who is this person? You'll say, that is my accountant. And then they will say, why are you paying her as a 1099? And why is she not your accountant? Then you can say, well, I'm a restaurant and I don't normally hire accountant, so she's a subcontractor. There, you get away from DOL, because they are looking at your wages, your employee. So you keep in mind, you can hire subcontractors, but the only thing is this subcontractor cannot be the one that does what your business do. You cannot be going, oh, I hire I'm a restaurant, but I hire my chef as a subcontractor. That doesn't work, because the chef is part of the business operation. It is not something that you don't normally do, but you could hire a cleaning person as a 1099 person. You could hire a CPA firm as a 1099 person. You could hire a lawyer as 1099, not your wages, not your salary person, right? So the DOL audit only auditing you for those people who are your employees or who should be your employees, but you did not pay them as your employee. Right? So it's a labor law compliance audit, and in particular, it's a Fair Labor Standard Act, which means fair. You need to be fair, hire them to a certain way, right? So most common in the small business world, the most common Fair Labor Act that they are talking about when they come to audit you, they're looking at you whether you hire child labor, and whether you paid people overtime, And how did you track your people's overtime? And if they take a break, and how do you deduct the break? So things like that. So those are all part of the compensation audit. Then of course, minimum wages. Minimum wages means that you cannot pay them less than that amount. Even though you say, well, I actually have to deduct the wages down below minimum wage because I pay this person's rent. No, you can't. You have to make sure that minimum wages is paid. If this person need you to pay rent or need you to deduct the rent out of their salary, you tell this person, no, I'm going to give you the salary, the wages, you go write the check to the landlord. You will not deduct that for them because that would be a violation of Fair Labor Standard Act, because by deducting that rent, your minimum wage went below minimum wage. All right, so keep in mind when we talk about regular work hours and overtime work hours, you know that it's not by month you count, not by 2 weeks you count, it's by week. It doesn't matter how often you pay your employee. You could be paying your employee monthly, but the overtime calculations still need to be bi-weekly. Bi-weekly, I'm not talking about every 2 weeks, right? You cannot say 80 hours, then you worked 1 hour more, so it's 81 hours is 1 hour overtime. No, maybe this 80 hours has 40 hours overtime. You know how that could happen? How that could happen? For the first week, this person only worked 1 hour or only worked 10 hours. The second week, this person worked what? 70 hours. 70 hours, that would trigger 30 hours as an overtime. So 80 hours, no, not the way to do it. You need to do it weekly. So every week, 40 hours is regular. Anything over 40 hours is overtime. So that is in this link, folks, and I showed you right on the bottom. Just keep that in mind. I actually don't expect you to hear me, then go back to do all kind of research. I am very good at telling you the core things you need to remember. You are a business owner, and you won't be a business owner if you're really not great. You are great. You are smart. You know how to calculate overtime hours. It is by every week, okay? So make sure that you remember that. So DOL auditor will need to know what when they come around. They want to know your vendor list. You know why? Because when you write a check, other than to your employee, maybe you're writing to Ying, and maybe you're writing to somebody else. And the auditors want to know who you are paying, so they want to figure out maybe some of the people supposed to be your employee, and you're just paying them like a vendor. So they're checking on that. So they want vendor list, they want your payroll record, and they also want your 1099 record. They will ask you, do you issue 1099? You say, yes, I did. Then they want to see it, right? And then, of course, they want to know your employment record, like your W-4 and your I-9, when you hire people, all of these records that you must have when you hire people, and they want a record of that. Okay, so folks will ask me, okay, I-9, that form is so hard. Let me give you one tip for I-9. When you fill out I-9, if this person has a password, all you need is the passport. All you need is the passport copy. Then you fill up I-9, you're done. But if this person gives you a social security card, you would need a driver license. So you need a social security card, driver license as a pair for the record, or is your passport. So make sure that you know that's how I-9 it is all about. You need to examine those records. Then W-4 is how much you withhold them, right? How much money you're going to keep back to submit to IRS. So that's really important to have. That's employment record. Employee rights in workplace. How did they find out that? And the auditor will interview your employee. They will find out what you do with them. And so if the employee goes, I can't even go to the bathroom, I pee in my pants all the time because my employer, my boss is really mean. If I don't finish cooking this dish, I just pee in my pants. And if you get those kind of report to if your employees say those kind of things to DOL, and yeah, you're being charged for sure. So hopefully none of my business owners who works business with us are that way. I'll tell you that I see more the other way around, is the employee actually abusing the employer. And I don't really see a lot from the business owner and just treating their people badly. Yes, there are people like that. By far, I see the other way around more. Okay. And not necessarily employee were just being mean. Sometimes it's because they don't know the rule. So they think they know, but they don't, right? So they could, for that reason, they could be, doing wrong things and accusing the business owner wrong. All right, so DOL, when they're doing audit, they want to make sure you properly classified your workers and you paid minimum wages, you paid overtime, and you also have a correct limitation of work hours. So this is more applied to like when they work for a whole day. So how many break they take, and do they not taking any break? So maybe you are telling your worker that, oh, you can only take 5 minutes break. 5 minutes break is not a break. It is going to be counted as part of the payroll. Okay, and the break has to be more than 30 minutes in order that to reduce the hourly pay. To save you paying for that half an hour. So it has to be over 30 minutes. Okay, and of course, job descriptions and also requirement for youth, for younger kids coming to help you. You can have them in the kitchen, right? If you're a restaurant owner. What can be wrong if DOL comes to my restaurant? What can be wrong? And there are a number of things can be wrong. Number one, you probably didn't really document your overtime very well. And you may say to the DOL auditor that, well, I know all of my kitchen people, they work from 11 o'clock to 11 o'clock. And, never early, never late. That's just how it works. But that doesn't suggest you have a good record. And by you saying they work 11 to 11, that's really not a record. So the real record is actually record that was documented on the daily basis, showing how they're in, how they're out. That is called records. So having those records are important. I know I hear you. And a lot of our small business owners, we say that, that's just ridiculous. These people, they don't even use pen. They don't even write. And what do you want me to do? And, if we do a clock, they forget, it's even more trouble. And so what do? I have a solution today. I have a solution for you. And then what else could be wrong? And the other thing could be wrong is you're paying this person's salary. But this person actually cannot be a salaried employee. So-called salaried employees are those exempted employee. Exempted employee just means that they're professional, they're managerial level, and they don't count their hours. They finish their work, they go home. They're just not hourly compensated employee. They're exempted employee. A lot of time you see in the professional firms like Community CPA, majority of our staff are exempted employees. But of course, our front desk and clerical level, they're by hours, but majority of them, they're exempted. That means we don't punch clock in and out, right? We don't punch clock for compensation, but again, you do punch clock because you want to know what jobs you're doing. So that is salaried employee. But if you're a kitchen chef, you are not salaried. Kitchen chef is hourly employee. So if you say, I pay my kitchen person by salary $3,500 a month, you're wrong. And they need to be hourly employee. They need to be paid overtime. You may say that, well, I calculated enough of money to cover overtime. Come on, Ying, what are you talking about? You know what I'm talking about? When DOL comes around, they say, well, that's a salary. So they take $3,500 divided by 40 hours to come up with your hourly rate. Then the kitchen employee said they work 80 hours a week. So you have 40 hours overtime on that very high rate. No kidding. And I see these kind of cases all the time. And the DOL auditors, every auditor has a different approach to the case. And I have seen cases where they just use 3,500 divided by 40 hours. So they're saying that the kitchen employee were paid $87 an hour. So overtime, folks, do you know what that means by overtime? That means it's 1.5 of that rate. So the kitchen employee is paid $131 an hour times 40. So you owe this employee $5,250 just in a week. That's how they will calculate. But of course, I also have seen other cases where DOL auditors understand that is paid for 80 hours. So 3,500 divided by 80 hours, then they're talking about $43 an hour, right? So then they say that you didn't pay overtime, so they do 0.5 on those hours. So folks, what I'm trying to tell you is that if you do salary on kitchen employee, you are set to fail. And I want to show you a workbook that we have to help you to not do that. But if you really want to pay your kitchen employee fairly, you go with this standard, but not a salary, right? And unlawful deduction is also another thing that can be wrong. For example, you make your worker pay uniform, or you make your worker pay meals, you make the worker pay rent, and before they get paid from you. Don't do that. And the best practice, if they eat in the restaurant, have them pay the restaurant. And or just make a record of how much, what they eat, and they need to pay. So they need to pay you after they got your pay. They need to pay that on their own. You don't deduct it. And if they want you to pay their rent, deducting their salary, don't listen to them, because that's against this Fair Labor Act. So you don't want to do that. You have them, you pay them, and you have them pay to the landlord. And if they're saying that, well, if you decided to have your worker to pay uniform and you change that, you don't want to do that. Insufficient tips can also make the waiter, waitress to get less than minimum wage. That is something you need to watch. If you contracted your payroll to your payroll company, to your CPA firms, and making sure that have them watch for you, because you cannot have people making less than minimum wages. And when I say minimum wages, folks, you notice that I'm not giving you that number, because I don't even know which state, which county, which city you're in. You could be having three different government give you three different minimum wages, guys. So you need to choose the highest one. And the federal government is $7.25. But when you go to some states, the minimum wage is $9.45. And you go to that specific city, the minimum wage is $9.25. So you just need to know what is the location you are in, the minimum wage for that area. Then that minimum wage, it is important to remember, if you pay your waitress a half of that amount, you better be sure the tips can cover the other half. So they actually got their minimum wage, right? And you, of course, should also make sure that the wages payment to immigrant workers and minors. You see, that is the language I got from DOL. They cares about immigrant workers. So you want to, I don't know, immigrant workers here, they're referring to those without working permit and with just I-10 with no status. and or they're talking about the visa immigrant workers. So of course, there's a visa requirement on all type of immigrant workers, right? Those compliance are important. But if you end up with 18 person working in your kitchen and you are paying cash, trust me, the Fair Labor Standards Act still applies to you. You still have to pay them properly, just like they have a status. Okay, that part, I think majority of the restaurant owners have already learned, and this has been in place that way for a long time, right? So the triggers for DOL to walk into your place, of course, there's a general compliance audit. So the department would give quota to different offices, have them to audit local restaurants or local businesses. But employee complaints are actually being the first one, the biggest one. So maybe your job description is not good and the employee don't feel like they are exempted employee. They felt like they're not exempted employee. They're like the kitchen employee. They're like the waiters and the waitress. Who knows? They feel like they should be paid overtime. They can complain. And the non-exempt employee not being paid for all the work they actually perform. So which is these exempted employee are the one that you don't have to punch clock, right? Non-exempt employee are the one that calculating their hours. So in this case, the people goes, I work 80 hours a week, but my employer only pay me 40. Then they will complain. It will be elevating that to DOL, and you're guaranteed to be reviewed by DOL auditor. So that's our trigger one, right? So our trigger two is industry. So if you are in the low wage industry and you pay wages all the time, that is really another trigger. So they compliance review these type of industry much more often. And I want to show you what are these industries: daycare facilities, restaurants, and the garment factories, healthcare agencies, motel, hotel, janitorial service, guard services, and agricultural jobs. You see, pretty complete. I mean, I see from our firm standpoint, we see a lot more audit related to the first three categories, like daycare, restaurant, garment factories. And what's gonna happen after you get audited? And the auditors already cited a whole bunch of violation for you, so you ended up be calculated a lot of wages you didn't pay. I want to show you what it looked like. So this is assessment by DOL. Okay, you can see that it is a summary of unpaid wages. So these pages can go on pages, just depends on how many employees you have not paid properly. So that's the employee's name. Then you have the address right there as number 2. Then this is the period they audit you, right? They could audit you 3 years. They could audit you 1 year, and it's really up to the auditor to decide. And then you have the investigator's name, the date, and then your EIN number. Here, I didn't write out the back wages due. This is in this particular audit, there's a $1,206.97 due on back wages. Means that these are the overtime wasn't paid, okay? But you see the next column kind of doubled that amount. So the total amount is $2,413. Did you see that? That LD due stands for liquidated damage. Liquidated damage due are also part of the payment to your employee. You were so bad and you are taking advantage of your employees so much. And not only you owe them the overtime you didn't pay, the government decided you should pay double what you didn't pay. So you will write a check to that employee for $2,413.94. So this is the assessment you will be getting when you get audited by DOL. right? And the steps in preparing for DOL audit. So obviously you don't really want to get assessment that is a huge amount. And if you ask me, of course, I was just showing you the beginning of the assessment. In this particular one, the assessment was going over $500,000. So not to say that is a very huge number. No, I would not say that. I'll say that if a restaurant of a 30, 40 employee size, and if you have a violation of wages and going over $500,000 is very easy, because even if you owe $1, you actually owe $2. So if it is $500,000, that means 250 is back wages. So though that's liquidated damage is excessive. Yes, I use that word excessive because it is not something make any sense to ordinary people like me. I am really ordinary. I don't agree with that one, but that's what the government do. And we're just trying to do the right thing so we don't get there, right? And the steps in preparing. Normally when DOL come to audit you, there is little or no advance notice. Typically, it is either a notice, a letter you're getting, and it's a very scary letter, and it looked like a court pager, a court page layout, and or you're getting them in your restaurant or in your business, and they're standing right there wanting to see it. So so that's how you're gonna know that you get audited by DOL, and you want to hire your payroll company or your CPA firm to represent you. I say that because majority of the small businesses, you don't run payroll yourself. So it is a good idea to have people who knows how payroll works to represent you. I didn't really recommend you to go to law firm at this point because really it's more technical at this point. When they just come, they want all these data, you want to work with your accountant. You want to prepare the document only what they ask. You don't know that it's not income tax audit. So don't try to go into income tax audit preparation mode. It's not the same. So you just gonna read their notice and give them to exactly what they ask. They want to ask you for your time card. They want to ask for your vendor list, your payroll list, and just give them that because they're auditing your wages, your salary. And then you want to work with your accountant, making sure that those are the complete document and you have. And then, or if they have to go on site later, and just be cooperative because you want them in, you want them out as soon as possible. A lot of times those DOL audit, you have the auditor has already met with people who works in the company. Of course, your employee probably didn't want to tell you. Maybe they're the one called the DOL to come to see you, so they won't tell you. You don't know, but they already met. They already got information from one side, but majority of the DOL auditors that I work with are not one-sided. They listen to what employee says. They also listen to what you say. So business owner, a word from Ying, and you want to make sure that you present yourself fully, properly in front of the auditor. You don't want your employee to come up with creative story or imaginary scenarios and to get yourself into a big trouble with $1 million penalties on your book, right? You can't get away from those penalties. And obviously you can fight in court and to reduce your penalty, to reduce your charges, or you can pay. And if you want to do bankruptcy, and then obviously all of these workers is your creditors. So it is not that easy to get away from this assessment. And if violation is found, assessment will be issued, just like the other one I show you. Then if that's the case, that's when, depends on how you feel about the assessment, and it is you to agree or disagree. If you agree, you sign, you pay, DOL will work with you to make installment payment or whatsoever, so you will slowly get that paid up. But if you don't agree, then you go to the court you go with attorney and to resolve that in court. And so you may ask, oh, Ying, how many people go to court to settle this? I'll say 50-50 based on our experience, because some of those assessments are very reasonable. And even business owner goes, oh yeah, I do need to pay. So, so that is paid. There's no argument. But there are sometimes those assessments are excessive. They're not reflecting the real picture. The employee were lying, or the situation were not right. So in that case, then you go to court. And I would say that for every case I saw that went with the attorney, and I have not seen one come back with more charges. I only see them lowering the charges. So that's just based on my experience, folks. And just don't try to imagine that's always the case. It really depends on how strong your case is, right? But what I see, that's what it is. So yeah, you got audited, you have to deal with it, right? So how to prevent audit? And first of all, I want you to have your mindset be correct. Being audited when you're in business, that's just part of the business. That's why, if you're really a good budgeter, I even tell people that to budget $3,000 to $10,000 a year to answer audits. Come on, we got so many audits going on. You have insurance audit, workers' comp audit, you got DOL audit, IRS audit, and your state revenue audit and your workforce audit. How many? And I can name 7 audits, just like that's just what in business is all about. So if you want to be in business, you got to make sure that these audits are just part of your business, and you have to be able to have your mindset correctly situated, so you don't get overly anxious, and you also are not too relaxed. You need to deal with it and you need to work it, but you need to allow room for those audits to go through time. I'll tell you the longest audit I have ever handled, which is on income tax audit side. Do you know how many years I finished that audit? 8 years. But I finished it from $1 million tax due down to $12,000 in 8 years. So audit is going to take time. So you just have to have that right mindset, right? And you cannot control your employee. So whoever reports you, just consider that's the care and your employee give to you to help you grow your business better. Okay, so there's no blame game, and you need to thank them for doing that to you so you can learn. Of course, good bookkeeping is important, so that way you can always answer these audits with confidence. All right, I want to say one thing about paying cash to kitchen employees, particularly the restaurant owners. If you have to pay cash to your kitchen employees. See here, I'm not going into elaboration of why you have to pay cash. Why do you care? People like cash, okay? So it doesn't matter. If your employee goes, I don't work for you unless you pay me cash. You pay them cash. That's very simple. And cash is not illegal transaction, but cash, it just make it hard to prove that you actually paid. So for that reason, you must have a good record to know that you actually paid. You must have a receipt to show that you paid it, right? So if you pay your kitchen employee, and if you pay them cash, or however you want to pay them, you must have a determined rate. You cannot do salary. Cannot do salary. You must have a rate, and you must have hours and the overtime hours calculated. And you must document the break times that they took, and you must not deduct things before the payment. Just make it clean, please. Don't even deduct anything, and use our workbook, Community CPA's workbook. So let me show you what that is. And let me finish the last slide. I'll show you the book. So The last slide I have here is do a self-audit. And I mean, okay, our government had given so much money out. You know it, I know it, he know it, she knows it. My puppies also know it. That's the fact, right? So with that, compliance is going to be the next thing. And complying you for income tax, compliance you for federal government payment, RRF, PPP, EIDL, you name it, right? So it is really important to be more vigilant about your books and records. If you never paid any penny to have your books and records done properly, trust me, right now it is time to do that, because you can't afford. When government comes to you and you come to us and tell us that you have never even done anything before. We have cases in our hand for 2018 audit. Nothing was done. Accounting was done on a piece of paper, and the owners just write summaries of estimate of all the items. And now the IRS come around, or not even IRS, that's a DOL, wants the vendor list. Where do you get a vendor list if you don't have your accounting record in place, right? So really, and do a self-audit, see where you are and what takes you to be in compliance with the requirement. Save yourself trouble. And you know, that's a thing that we tell people, that do a self-audit. If you are the kind of person, when government comes to audit you, you can't sleep. And then this is the best way to do it, right? Implement new tools to accurately account compensation. Maybe that's time card, punch card, maybe that's your Excel, whatever you do, implement new tools to calculate that automatically. Review your job description. Make sure the person is doing what he is supposed to do. You're not gonna make a waiter cutting meat in the back, and then you better change their job description and the rate, right? And review classification. Is this exempt, non-exempt? You know, don't think that a kitchen employee is exempt. They're not. They're hourly employee, right? Review minimum wages. And the federal, state, county, city, do you know that every level of government has a right to do a minimum wage? Ridiculous, right? You would never see this in China. But, you know, here in US, people are, you know, the government has a lot of power. Local government has a lot of freedom, and they can decide on minimum wage and apply policy consistently and make sure all records are complete and resolve any inconsistency. So if you already know you have issue from the past, and make an amendment, work it out, right? So now let me show you the workbook that I have. That would be our last piece. I want to show you what you do. So you see my workbook, you'll have an idea. And if you can create that on your own, that's even better. If you cannot, you can always contact our office to inquiry about our calculator and to use that as your tool. So this is the person, Brent at Community CPA, Brent Myron, and you can talk to him at our office to inquiry about the kitchen employee compensation calculator. And you know, this is our phone number, so I just want to leave this screen with you. Now let's go to what I want to show you on that workbook. All right, so you're looking at my website, and this is the workbook I am talking about. If you look at on the bottom, and we have this cash receipt form, right? In this form, and we have a Bob Burgers, Burgers as the restaurant name. The employee name is John Smith, and the rate is $9 an hour. And so this is a month of March that we are talking about. I will come to the setting here. This is in our workbook, you can set years. So this is 2022. You can set the week starting, and then also the break time. How many time you have a break? Break is half an hour, right? And then you see this is the rate. You really need to get the rate there. That's really important. Overtime is a multiplier of 1.5. Oh, this is cash for the month of January. So let's take a look at that. So this is so-called a kitchen employee, John Smith. and he get paid monthly. The boss says that I'll pay you monthly and I pay you $2,628 one check. So John received it, signed it off, and dated. So that's he received that amount. But don't deduct anything. You see how the deduction here is 0, and don't deduct anything. Let him pay whatever he needs to pay outside his work on his own, right? But this 2,628 cannot be a fixed amount because this is not a salary, it is hourly. Let me show you what that does in detail. See, this is January 22, John Smith is every day. So what he did it, he will be the one says that, oh, you know, I start 10 o'clock, I finish at 10. My schedule is exactly the same all the time. I really don't need to do this time card. You can just pay me salary. You can just give me the salary of $2,628. That's, I call it good. It is not good for DOL. What DOL will do, DOL will take the 172 hours, that's a regular hour, divided by 2,628 total, and then says that you owe 80 hours overtime, because that's what DOL will do. But in most of the businesses, because you pay people salary, so you didn't track the hours. So it will be up to John Smith, whatever he says. So John Smith will call DOL or will meet with the auditor, says, you know, no, I work 80 hours a week. You know, I don't work, you know, they're saying that I work 60 hours. No, that's lie. I work 80 hours. And then if you have another person come around who works next to him, goes, yeah, we work 80 hours. And it is your word against their words. So it is not good. But look at this. So they put in the starting, the ending, they took 2 breaks. So the time is 12 hours. So this worksheet we have will calculate the week hours and then the week hours in January. So at the very end, it will tell us that in the calendar January month, what is the regular hours? What is the overtime hours? So it will produce the total amount for you. And here you will set the minimum wages, because the minimum wage could change, right? So by July, some states will change minimum wage. So you may have it as 9, you may increase to 9.25. See, if I increase that to $10.50 as a minimum wage, and then my cash receipt is more, it's $3,066. Because my rate is $10.50, so my overtime, my regular time was increased my pay. See, this is where it's okay. You are allowed to pay your employee on a monthly basis, but you must calculate overtime on the weekly time. So this workbook is really making the calculation very simple for you. You don't have to think of, oh, you know, but my January the 1st is only 1 day. So what do I supposed to do? That belongs to last month. And so this whole workbook will consider that 1 day and knowing what is the overtime for that whole week. So with that, you see, we have January, we have February, March, and so April, you know, you can put that in. So what can happen is you can print out the calendar and just like this, and give to your kitchen employee or give to your employee that who is non-exempted, but you pay them monthly, have them fill this out. Then you can come in and do that at the month end, calculating out exactly what their pay is. They will not be paid the same every month because it will have some difference. But even if they get paid the same, that just means the hours they put in there is the same. Then it has happened to be the same, which is okay, right? So that is how you can protect yourself. I just want to show you the workbook, and so you can definitely an inquiry of our firm to see how you can get hold of the calculator and to start doing it right. and doing it right in 2022. And if you got our workbook in the month of April, go back to put in January, figure out what the difference is, and settle with your employee. And you want to make sure that you don't lose your employee because they felt they were not treated fairly, but you also don't want to keep them here. And when they are destroying your business by speaking lies to DOL, okay? And if that is the case, you get audited and you don't have good proof, what's so good about that? You will be at a loss, not your employee, okay? So I want to make sure that that is being knocked into your head and you actually know how important that is. And the general rules is if you don't know whether this employee should be paid salary or wages, you just pay wages. You cannot afford to make it wrong decision because the calculation of overhead over time, it is actually not to your benefit. You're gonna owe them more money than you want to. Okay, and here I have a question from one of you, and I have an online business and I have some employees who work virtually. Does this minimize risk of DOL audit? Very good question. Let me explain this to you. First of all, you want to know the difference between employee and a contractor, right? And a lot of time when people work online, they are controlling their own time and they are reporting to the business by the job they did. So, or maybe they're doing some special project. For example, we would hire people and to do the computer programming for our particular features on the online application. But those people we hire, they're not accountant, right? So they are subcontractors to us because they are the programmers, and we hire them for that particular code, right? So they are online worker, but they are not employee, they're contractors because we hire them just for that code. And the next time if we need someone else, we go online, search for someone else pops up. It could be a business, it could be employee. So if you have some employees as you defined online who works virtually, so that tells me that those employees are your core business activities. For example, if you're a health insurance agent, they're the agent helping you call the client and get people to buy your health insurance package, right? So if they are like that virtually employee, then you want to determine, that's number one, they're employee. Number two, you want to determine whether you pay them by hours or you pay them by salary. Are they exempted or non-exempted? So in my opinion, and if they are agent kind of worker, they are wages workers. So you want to pay them for hourly and for overtime. So you can develop internet tools to monitoring the hours they booked and to pay them that way. And this, having an employee, it is always subject to DOL audit. It doesn't matter how you have it, whether online or on-site. But one thing I want to give you a bonus point. If you are hiring someone to do your work, say in India, and not here, so they are producing work in India, they're really not your employee and they're also not your subcontractor. They are really a vendor to you. They produce work in India, so they are sending you an invoice, work is done in India, so they're not really a subcontractor, kind of like 1099 here with people that you work with. So making sure that the virtual employee doesn't include people who are overseas. So there are employees who are working here and are subject to Social Security Medicare benefit, right? I hope that I expanded a little bit, but answered your question, hopefully. All right, I think we conclude today's webinar right here. And I hope that you learned one or two things from us related to DOL audit. And I hope you will never get audited by DOL. And I also hope that the DOL will know that today's labor market situation and move their emphasis from this place into other areas, because it is just doesn't even make sense when the labor shortage is so much. Who is going to underpay laborers right now? Everybody is overpaying laborers in order to get people to work. So I just hope that there is nobody they can find violated any rules related to Fair Labor Act. I will talk to all of you again and on Tuesday. And I don't remember my Tuesday subject, but it will be really good. And the CAT will send you out the notice. And so you will see the email, and you can also find me on YouTube. If there's any subject you want me to talk about, you can email me, or you can just tell CAT that you want to me to talk about that. I will study and I will come online for you. Bye-bye. Have a great weekend. 1.5 left.